The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome to a special edition of the Power Trading Hour. All editions are special. That's why this one's special also. Well, it is March 28th. It is the end of the first quarter of trading. And we're seeing a little bit of lipstick on that pig. Yes, we are. They're going to do a little bit of window dressing out here, up just shy of 4 points on the S&P cash, right up at the previous high. We've been talking about the weak volume. We had 2.1 million shares. Then yesterday, 1.9 million shares, billion shares, starting the show. And then 1.8 billion shares today. So looked like we're probably going to end up with about 2.7 or 2.8 billion shares for the day. And that is testing a previous high where we had 5.6 billion shares at this 1566 on the S&P cash. So any close below this is a big, huge, long-term sell signal in the marketplaces. Maybe the Fed's going to come out and dump another load of cash on us, but I suspect it's going to be rather tough with the economic conditions in Europe starting to fail, and the numbers we had out from China also show that that they're trying to cool off their economy and succeeding. We also had numbers out for jobs or unemployment. We also had housing numbers out, new starts for new housing, a bunch of other stuff, and some stocks really not doing that well. So it would be very optimistic to think we're going to see incomes for the corporations grow significantly in this next quarter. I think probably the best you can hope for is that they remain at the same, and maybe we get a pullback in the third, fourth quarters, get a rally, but we'll have to see how the volume is on the pullback. It has so far been pathetic over the last 3 months. And just coming into a day and seeing 1.8 billion shares going into a 3-day weekend is rather bearish, let me put it that way. At 4 p.m. on March 28th in 1979, the worst accident in the history of the United States nuclear power industry began when a pressure valve in the Unit 2 reactor at 3 Mile Island fails to close. Because of improper training, of course, they make it a big problem, and a nice big air bubble develops in the reactor coolant core. Most people then decided that they were nuclear physicists, and they didn't bother to go to the 6 years of college to actually learn anything about physics, but they knew that the whole thing was going to blow up, and they made a horrible movie out of it a couple of years later that basically everybody watched and thought that it was true. China syndrome, that it would just melt down to the core, and that would be it. And what can you say? A lot of disinformation. We spent a lot of money, probably that we shouldn't have if we would have continued along with nuclear energy. France has had kind of the model of the world to watch for how to do it, but they had basically crews that were prepared by the government, employed by the government, and it wasn't a union deal like this TSA crapola. They actually have most of their operators come from the military, and they are trained for just about every possibility. And of course, then everybody said, well, it was just like the Russian reactors. Well, these are a different type of reactors than those, and the France reactors are a little different than those. The truth of the matter is that we've spent a long time working on fossil fuels where we could have been off of them. The problem remains, and that is what to do with the waste. And if you wanted to cause a problem, that would be where it's at. Today, China is building a absolute big truckload of reactors. These are what are known as pebble reactors. They can't have the problems that these reactors that we had were developed on. Part of the problem we had in the United States is since we spent all the money on building bombs, most of the chemical reactions that we were looking for were somewhat dangerous. Now a lot of these reactors have been redesigned to be fail-safe. There is nothing short, including of a 747 hitting these things, that would make them go critical. Molten reactors that use molten salt now. The problem with, of course, with using water as the coolant is that it will, of course, burst pipes and everything at a fairly low temperature. Molten salt can get up to, 900 degrees Celsius or something. Something ludicrous that would always mean that the coolant would continue to flow. Some of those have already been built in the world. But the whole pebble reactor thing, probably the wave of the future. Until the sun starts shining 24 hours a day, or the wind starts blowing 24 hours a day, or the tides come in and go out every hour, finding a source of renewable energy this cheap, probably going to be impractical. I know a lot of people have a gut reaction to nuclear power. It can be done safely. The problem is, can we as a society decide that it is more advantageous to have a little nuclear waste laying around, or a whole lot of coal dust in the air? We're getting away from coal. We're going to natural gas. Everybody will hate that soon enough. The Luddites in our world will never stop. Of course, this is all the hippie community from the 70s who told us LSD was great and nuclear energy is bad. Probably just the opposite. Nuclear energy, we've had one fatality in 50 years or something, 60 years. Not a bad deal. But probably the management style needed to change, and it certainly did. We haven't had any major problems in a long time. Most of these facilities are getting to the end of life where they are impractical to repair. We're going to have to find some kind of long-term solution for energy in the United States. But just something to think about on this day in 1979. We continue to look at the summation index, or I do, as the proof in the pudding that we're in a critical stage of the market. The summation index, for those that are new to it, is an oscillator of advancing and declining stocks. The idea is that as you continue to go up in higher and higher levels, that you should have the same amount of stocks participating. The New York Stock Exchange Summation Index is 2,700 stocks, or 2,750, or whatever they are, on the New York Stock Exchange. And each day you just look and add whether each stock closed higher or lower or the same. So potentially you could have plus 2,750 or minus 2,750, or more likely 1,500 up one day and 1,000 down the same day. And you put those into an oscillator and just say, okay, are most stocks opening higher, closing higher each day, or are they closing lower each day? And what you should see as you reach highs that will be retested is a vast amount of those stocks participating, not just maybe 100 or 200 of the 2,750 stocks on the New York Stock Exchange. You expect the bulk of them to be. And over time, you put this in an oscillator and get a nice little average of just how many stocks are closing higher and lower as the indexes are closing higher or lower. And what we find out here is in the summation index against the New York Stock Exchange index, which is 2,750 stocks, probably a very good sample of what's going on in the market. And what we've seen is this last run is that we've continued to see fewer and fewer stocks participating as we push this previous high. That we have such a light volume at this high is also problematic. Maybe this is where we see the big turn in this market. The problem is the volume has been so light for so long that if you've done this any length of time with price and volume, the farther it's pushed on the lighter the volume, the more tragic and sharp the reaction will be when the market does break. But I know a lot of people don't believe that. They just think that the Fed will throw more money at the subject. I suspect what we are going to see is a huge move in the dollar, and once we break this 84 level, we're off, 28 cents today. But I think we're going to get up here and break this 84 level probably Monday or Tuesday. When we do that, I think we'll be moving up to the $88, $89 level on the dollar, U.S. dollar index. And at that point, I think we're going to start seeing a lot of revisions to earnings. But with China pulling back and Europe, with the exception of Germany, solidly in recession territory, going to continue to see issues with that. But summation, as long as it's continued down, I don't expect any wild breakout. We've been dancing around this 1566 for a while here today, and no volume has really picked up. In fact, very, very light volumes today at 1566. And since the start of the show, what do we got? About 25 million shares. So very quiet day out here today. Other things in the news, RIM came out with their earnings this morning, and Thurston Howell III, it's actually Thorsten Heinz III. All I could think is every time he puts his bloviated name on TV, Thorsten Heinz III is the CEO of BlackBerry. I can only think of watching Gilligan's Island and Thurston Howell III. I think I would change his name. There's also a guy that's racing in NASCAR that's got a horrible name. I will not say it because most people will accuse me of saying something foul, most foul. I would think I would change my name if I had a name that bad. If Thorsten Heinz III, he isn't a third, but it's just so close. Well, anyway, I'm always think of him. Anyway, he has been brought on to actually try to get as many shareholders that are stuck in this stinker out. And he came out and bloviated a bunch of things this morning when the stock started trading lower. He came out yet again, firing away. My guess is then he picked up the blowhard of CNBC, and that is Cramer. And Cramer said, oh, they're just all trying to get it at the stock down because they're short. And Cramer started blowing about it. It got it up a little bit. Let's get a BBRY. I'm not in this. I don't have one stock, a stock over it, but what's up? 27 cents. Basically, everybody knows that these numbers are pretty phony, and as soon as everybody started saying that on CNBC, the argument was whether or not the shorts were just talking these numbers down. There's nothing good in these numbers. I looked through them. It's not. Is it bad? Cut your throat time? No. But it's just the end. The volumes that these guys are shipping aren't coming close to being to the level of profitability that they need to be. When we talk about Apple and their profit margins a few years ago at 60, 65%, and BlackBerry's now saying they're making 20%, yeah, I mean, you're talking about making a third on selling 1/100th of what Apple is. This seems rather ludicrous to think that they've got a long future out here. And Cramer, blowhard of the week, trying to save his buddies that are probably, we'll talk about it.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at DirectionFunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Hey, we're going to get into a little news. I don't know if you've seen it, but two of the more bigger blowhards, I kind of say that they all are in the Senate, Chuck Schumer and who was it else? It was McCain. I don't know if you saw this today. They're at a big photo op on the border with Mexico about how great this fence is and everything. And they're standing there getting interviewed. And a couple of more Mexicans hop the fence right behind him on national television. I don't know if anybody watched it, but it's just about telling everybody how great everything is. And it would almost be something you'd want to see on Saturday Night Live. And I don't know if Saturday Night Live's still doing anything, but maybe they'll have, this will be the gag for Saturday night, but pretty funny. Other things happening in the market. Verizon Fios wins the Consumer Reports Best Internet Cable Company. I do have Verizon Fios. And we use it here in the office, but it is a fully fiber optic cable system, probably the best in America right now. I've enjoyed it since I've moved here and had it for almost 2 years now. Cable companies routinely score lower in customer satisfaction than almost any other consumer service, and a large part of that is the fact that most Americans can't choose their cable provider. Actually, we can go between where I live, Bright House, and Fios, And I get incessantly bombarded with stuff from Bright House. I'm sure if I quit them, I'd get bombarded with stuff from FiOS. But we have some competition. They continue to try to screw you on everything on the price. But I have both their cable for internet and for video. But kind of interesting. I figured they were probably the best. They charge expensively, but I think as far as downtime, I have about 99.9% uptime on FiOS, and it's been my best experience in a long time. They've got some moments in the morning for some reason that it's off for a couple of minutes, around 8 o'clock in the morning. I'm not exactly sure if that's the router rebooting or whatever, but it's never been enough for me to go after it. But if you're a Verizon supporter out there, at least they are doing their best in delivering internet to people. Google Glass is made in the USA. Google is out saying that they are only going to be assembling and finishing their Google Glasses in the United States. Most of this is because they've worked on other products, and before they could get them out on the market, the Chinese had already stolen and copied them. So what they're going to do is order the parts and assemble them in California. I guess until they get these things going, they don't want a lot of that technology outside of, at least as far as they can see, which is going to be fairly locally in San Francisco. It's going to be one of the few things where they're actually building in the United States. High-tech profits, but what can you say? Cisco is letting some people go. This happened a couple of days ago, but I thought I'd wait for today to let the dust settle. What we have is a CEO that's on his way out. He's going to try to make this company look as absolutely as best as he can as he goes out that door. He'll be selling shares into this market all the time. He's John Chambers, probably the most self-serving CEO of the last 10 years of the tech industry. There's some that are just outright thieves and some that are just kind of the warlords of companies. He's continually milked this company for everything he could for himself, while not doing much for the shareholders. Well, what can you say? He's letting another 500 people go. That's less than 1% of his about 73,000, 72,000 employees. I suspect that we're probably going to see this company downsized to 50,000 employees by the time he's out the door in the next 2 years. I don't think he's said who's replacing him, but it will all be about cost cutting and not taking any real big opportunities to leave this company with the highest share price so he can dump the shares when he's no longer the CEO. And sell as many in the meantime, so at the highest prices. But he will be leaving, and probably not too soon. And that kind of starts it. We're going to look at a couple other companies. We did talk about what do we talk about? We talked about RIM, BBRY now. And, it's sold off a little bit off of its high out here. This thing, I've heard, again, I'll get back into it with Cramer. Cramer just basically bloviating about how this was. He got it back up for a little while. This stock doesn't have a lot. There's not a lot to buy, no matter what Cramer blows about. I'm sure he got a phone call from one of his buddies. In fact, we'll talk about this when we get back. Cramer is not your buddy. That'll be the title of the next segment when we get into some stocks here, but we'll get into it. Be back in a minute.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we're back, and everybody thinks Cramer is an entertaining guy. I have to say that I don't mind watching him too much. One of the things I do have to say, though, is he is not your friend. He is your enemy. He is, if you've read his books, if you've read the books of the people that work for him, you know pretty much exactly what he's like. Basically, he about blew up his hedge fund twice. The only times the only reason that we even know him anymore is his wife came in and saved him at the last minute. It's in his books. And if you read what his employees said, basically he made all his money on insider trading and insider trading information. When the laws changed that the CEOs would be going to jail in right around, 2001, he basically gave the reins to Berkowitz, his partner in his hedge fund, and decided to step back. That was basically because right around 2001, he had basically blown up his fund for the second time. So he's kind of an all-or-nothing kind of guy, and other hedge funds have blown up, so I won't bring that against him. Basically, I will bring up against him that the way he made money was insider information. Anybody could trade if they knew exactly what was going on. If you called all your buddies from Goldman Sachs the day before, the idea that he's some kind of wonder trader is beyond me. But he has enough people following him that he can cause movement in the market. This morning I thought I saw exactly what I've seen before, and that is if he has a bunch of buddies that are trying to cause a short squeeze, he probably knows them and will help them out when he says so. And today it was just extremely blatant. Most of the time you could say maybe he's just stupid, or maybe that was his just opinion. Today you had some pretty learned inside information going to Sorkin, and basically you had Cramer showing up 30 minutes later and throwing as much cold water on it as you can. I read the statements. They are ludicrous on their face. Basically, he says that he sold 1 million of these phones, 3/4 of them which are already spoken for. He won't say who's taken them, who's done them. There's no way to actually ever check out what Thurston Howell III, the CEO of Research in Motion, actually said. So the question is, it's the short. And granted, this stock is 50% short. You're probably not going to make any money one way or the other. But I think the tail on a day when we're hitting the highs, all-time highs in the S&P cash, and this thing can't get going with all the BS surrounding it, tells you everything you need to know about Research in Motion and Cramer himself. So that is my opinion. Oh, the other thing is he's not beyond the scope of pushing people into politics. If you remember the guy that he helped get in as governor of New York that was famous for transporting hookers across state lines, it was pretty much a whole Cramer thing there. He did the whole we're going to drop all the good trades in your account kind of thing, and made him about $16 million so that he could go on into further public service. Kind of the same thing with Hillary Clinton and her cattle futures. So I will put 2 strikes against Cramer right now. So what can you say? Oh, other things we wanted to look at out here. I had from my list here. Some people had asked me if there's anything really going on about this spam house and whether it was something we should be looking at. And for the most part, it's a non-story. It is a big story, and that is that you have a bunch of people that were supposed to be fighting spam. They were, in fact, implementing it. They are in a NATO building and refusing to come out. This thing was meant to take an atomic bomb, and about 15 years ago abandoned. The cops are just sitting around it as these guys continue to plan attacks on the internet in Sweden. But not a lot happening, actually. Most of the internet has already set up blocks and cut the lines to these folks. But it was a lot of news, short-lived. But I don't think it's going to be any bigger thing. Over the last couple of days, we were talking about some of the stocks that have been reporting. Some of the ones that have been interesting was Mattress Firm. Now, they came out with earnings, was it Wednesday night? Yeah, Tuesday night. Had a nice big move yesterday. That move did come on volume, but you've got some. It's kind of a light volume stock. I'm not going to say it's monstrous, but you did have basically, 1.5 million shares yesterday. Let's go just a little bit longer into this thing. It comes back and fills a long-term gap that this thing's had. Unfortunately, that gap came down on monstrous volume of 3.8 million shares. That was on June 6 of 2012. And it's been trying to come back into that range for a while. This is probably one of the strongest movements of anything. And this is Mattress Firm's holding companies, FRM. There are three companies pretty much in this sector, and all of them were pretty much being hit by much lower margins as more companies get into making foam beds, which apparently there's not that much trouble doing. Most of these are filling these gaps right around that same time, and what we're seeing is Tempur-Pedic is pretty much sealed its gap over those last few, well, what was that, the gap on this one? Same day, Tempur-Pedic. Everybody came out and found out everybody was buying third-party beds that didn't advertise around the clock on radio and what's your sleep number and all that kind of stuff. These things have finally gotten back into those highs, but they're nowhere near the volume that these came down on that 6/6/2012 date. This one came down on almost 42 million shares. What did we see yesterday as it came in and filled that gap? 3.2 million shares. So these are probably pretty close to finding massive resistance on any of these, anybody that bought these things before the bottom blew out that still had it. There's one more on it. It is SCSS. And let's see, what else is there? This is, well, this one's done it a couple of times. This one actually did a little bit better, Select Comfort. That's the one that supposedly you can put two numbers in, one on each side. So everybody likes a firm and a light mattress. Just trying to see what this thing's doing. This one, of course, not near the recovery that the rest of them's had. It was down on high volume on, March 4th this month on 8.3 million shares. It's come back and filled that gap a little bit, but not near the kind of volume. This one looks like the weakest of the sectors out here, and maybe because I'm trying to remember which one of these was the most copied of these beds. But all these in this sector out here look like they're probably up against some pretty significant resistance. Some of the other stocks that came out that I wanted to be talking about, Red Hat, RHT, isn't it? And Red Hat, we've been looking at a lot of these stocks like Oracle. Red Hat is another one of these where the energy has been to the downside. Most of these big companies in tech land have been weak. The strength has been coming from the consumer side of the market and not the tech side of the market. This one's had some huge volume out here today, and looks like it's going to be getting in and testing this low of December 5th at 46.35. You want to see no volume at these lows, not a huge volume reversal out here today. I didn't see if this thing had any news or an upgrade. Probably had some kind of upgrade news or pseudo news today. Let me see, headlines. I need a little Jeopardy music when this plays. Come on. There we go. Okay. Red Hat earnings said not to be as bad as first seemed. So we really didn't mean it, I guess is what they're trying to say. It got close enough at the low today. In fact, what was it? The low of the day was 47.50. So you still have, another $1.50, $1.20 to go test this lows. And I suspect you probably will in a while. But a nice range out here intraday. Again, a lot of this is window dressing for the end of the quarter. We'll probably see at least a little pullback starting on Monday as a lot of people start rotating out of the weaker stocks and buying more of the stuff that's working. Speaking of stuff that is not working, when you look at Apple, it is definitely headed back to that $435 range, maybe one more time before this thing finds some footing. But it continued to be the low of the day so far, 441.62. This thing's probably going to get in that 435 range, I suspect, and that's probably going to tell us a lot about what's going on. The previous low that this thing was bucking up against, let me get to a little shorter time frame. There it is. Was the high volume low where this thing was bucking, and that was the January 25th, and a low at 435 with 43 million shares. This stock probably doesn't have a lot of volume, doesn't look like it's going to bust that low, but that 435 level probably is where this thing's going to be bouncing off of as it consolidates. Remember, you had to move all the way from $705 to 435. It ain't going to just go away overnight. It's going to have some minor bounces. And it's going to take some time, but you could see this thing bounce along for 3 months or 6 months before it finds footing again. They are rumored to be coming out, of course, with a cheaper iPhone 5 and a bigger screen version of it. But I don't know, Samsung's pretty much done all that. If they have anything else in the hopper, it's probably time for them to get it out the door. The most rumored thing was a Apple TV. It looks like they've abandoned any rollout of that product this year. It looks to me like they're looking at a very high-end version of Apple TV that works on what's known as Ultra High HD, which is an 8K or 8,000 pixel line screen instead of what we're normally thinking of as the 1080p standard that most people have in their homes now. Anyway, they're looking at a very high, very specialized TV experience and continuing to try to work with people in Hollywood, which they've had a huge problem with. Everybody knows if you were in any part of the industry in music, what happened after iTunes came out, and most people don't want to be subject to one provider like Apple. In fact, Intel's actually getting a lot more traction in Hollywood about putting together a system, and I think they got about 3/4 of the people lined up from them because people are just not as worried about them. A lot of people, especially in the music industry, are worried about what Apple and the kind of pressure Apple can actually put on them. But kind of interesting, and why the market's not going anywhere. Let me check to make sure that's still not the true what's happening out here. Yeah, 1567, so we're on point above the all-time high with this 2 billion shares right now. So very, very light, if any kind of volume out here. What do we got? I wanted to talk about gold, too, before I get into the final segment of the show here. You know, we've had gold off. It was off significantly, $11.30 today. You could go into a 3-day weekend and not see any strength in gold. Probably tells you a whole lot. The other thing I would say is as Europe fights and Cypriots fight to gain cash to buy everyday things, they're going to probably be liquidating somewhat of what they need in gold. So a lot of people think if you get to highs and everything falls apart, first thing they do is start buying gold. Normally they need cash and they have to start selling gold, and it's just kind of the opposite of what a lot of people would think, at least for the first month or so. A lot of times you'll sell exactly what you can. Maybe you're sitting on some big profits. Maybe you're a late comer to gold. But the first move is a little counterintuitive, and normally as inflation, that kind of stuff raises its little head, and you get past that first movement when people are trying to raise vast sums of cash to cover the stocks that they've just taken huge losses in a massive move in the marketplace. They sell the stocks that they're doing the best in, not the worst in, and a lot of these people have gold from a long time ago. I think the first time I bought it was printing off at 274 or 278, something like that. A lot of people have made a lot of money on gold over the years, and it is the people that get in last are going to be probably making the least and taking the most amount of risk out here. But don't be expecting that if we do have a pullback, the first thing everybody's going to do is be buying gold. The dollar is in an uptrend until I see some kind of counterintuitive motion in the marketplace. I still think that the dollar will continue to strengthen, especially on weakness in euro, especially when we see Slovenia, Slovakia, some of those other countries out there being treated the same as the Cypriots. And I suspect we're probably going to, now that they've made this thing stick, we're probably going to start seeing that in a lot of those southern European countries. We'll be back in a minute. We'll be talking about Game of Thrones. How's that in investing? We'll talk about it in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And we had a comment in the den about Biogen IDEC. They got approval of their multiple sclerosis drug, and no, it isn't a cure for it. This is there's several drugs that have lately been approved. Novartis had one, and Galena, I think, and Sandoz Bagoa. Boy, they make these drugs hard to pronounce. But anyway, these The other two are oral ones. This one, you have to have an injection or infusion of it. All these basically downplay the problems in the central nervous system, but they are not cures. It is one of those things where I had a friend who had his child basically come down with it at about 9 years old. You can expect that they'll live about 7 years. His child died about a year and a half ago. Key was he always kept a very upbeat attitude, but it was a disease that not only killed a child but killed the family, some of these drugs are just as bad on the families as on the person that gets it. Unfortunately, if you know much about the disease, there's almost it's going to be probably another 20 or 50 years before we find any way of solving this issue. Sometimes you just can't take the salt out of the soup. If you dump too much in, you can't. And one of the problems is when, especially in the nervous system, when things go wrong, especially that are at the DNA level, there's just no way of undoing them. In fact, there's kind of an interesting, when you look at, if you ever remember seeing the movie Blade Runner, all the replicants were made with an error in their DNA, and no matter what you do to go back and change it, basically comes up with the same thing, which is it causes a poison that eventually kills the subject. Unfortunately, what we have in MS is a disease that will continually spread. You can actually keep down with these drugs a few of the real problems, but there are 3 other companies that have solutions in this area, and they're going to make life better for the people that have it. Unfortunately, still no cure out here for those folks, but certainly going to probably be about $3.5 billion in sales for this company. There's a couple million people in the developed world that have this, but I don't think it does anything for the long-term outlook for additional years, but it will make those years easier to stand. BIIB is the symbol on that one. One of the things I wanted to get into with the last minute I have here is that we've got the Game of Thrones coming back on the air, I think this weekend. And not really ever talked much about these kind of things in technology and investing. But I found it interesting that the most copied and watched show on the internet is Game of Thrones, even though you can't watch it from HBO, or I think you watch it at HBO Go, but you've got to have cable. Fully 95% of the people that watch Game of Thrones are watching it illegally because you have to have an HBO account and a cable account. Most people are not willing to pay for it. I think Sunday night going to have a lot of people watching it on HBO. But kind of interesting to think there are huge areas of the world you can't see it legally, and people just download it anyway. I think it's probably time for HBO and some of these others to start figuring out the world's changed and giving a legal way for people to watch the show if they don't want to subscribe to HBO. Just a thought out there. You got 95% of the people watching your show not paying you a dime. Why don't you change your ways? We'll see you all Monday next week. Same bat channel, same bat time.